Hello, everyone. Today is Friday, April 21st, 2023. My name is Evan. Welcome back to another edition of Stock Market Weekly. This is episode 680, and we are going to do a charts-only version. So typically we've got two parts. We kind of look at the data first, do a little bit of a presentation, but we're going to skip that this week. We're going to jump right into the charts here, maybe look at a little bit more individual stocks. So we typically keep things pretty high level and macro high level sort of focus. But in this video, let's look at some stocks and see what's going on underneath the hood of the market. And we're going to dive right in here with TC2000. This is our ultimate swing trader layout. It is a layout available on our website for you TC2000 users out there. If you follow my mouse in the top left, you can see sorted right here, 5-day performance. IWM at the top of the list, followed by SPY, Dow, and Qs. It was a pretty flat week out there for the broad indices. In fact, the Russell 2000 was the only index in the green here, about 0.62% higher. Everything else was relatively flat. We do have earnings season, which is underway. We're going to look at a couple of those components in just a moment. Before we do, though, we're going to look at the just the broad-based trend here over the past, well, we've got about 4 or 5 days that we're looking at here, going back to last week, or I guess earlier this week, I should say. And you can see that most of kind of the movement this week was pretty choppy, pretty sideways, pretty flat here. So Dow Jones in the top left, you can see kind of starts in the upper left, finishes in the bottom right. S&P, same kind of shape. Nasdaq, same thing, mostly sideways. You can see the Russell 2000 in the bottom right, trying to just do a little bit better, trying to go more flat than some of the other indices. But generally speaking, it was a very noisy, kind of volatile digestion sort of week here. As we got earnings season, as we see yields that are still trying to kind of creep higher a little bit. But notice, you know, if we kind of separate from the noise here and we just look at volatility, I think the VIX was absolutely noticeable this week, or notable, I should say. Wednesday, the lows here, 16.17 on the VIX. You got to go back to 2021 since we've seen a reading this low here in the VIX in volatility. Now, we did get bid up a little bit into the weekend here, but things are very much in subdued territory here for volatility. There's not a lot of fear out there. We've got earnings coming up. We've got a Fed that is, you know, hiking into a recession, it seems, but VIX does not care about any of that. It is underneath and hitting new multi-year lows. So I think that is fascinating right now to see how this is going to shake out here as we really kind of heat up into earnings season next week. So that is noticeable. Let's go to let's go to the SPY first, and before we start looking at some individual stocks, we'll do our trusty old roadmap here. We'll kind of take a look at where we've come from, where we might be going. And if we look at our grid here, you know, we basically are sandwiched still in between this 4,080 to 4,200 zone. So these are some influential kind of horizontal levels that we've been keying off of and kind of looking at over the past handful of months, years almost. And so when we look at a daily chart here, you can see that we are just very much comfortably kind of consolidating in between these two areas here. And these are the most significant relevant zones that I'm paying attention to. We haven't broken out. In fact, we're just consolidating even more so in between this range. So I still just, you know, want to echo the thoughts really from last week, is until and if we start to really resolve one of these two directions, I do want to give the benefit of the doubt to the buyers here, and the fact that we are holding up, we are in this uptrend, we are consolidating, and volatility is compressing. So I do want to give the benefit of the doubt to the bulls, but to really get some momentum here, I think we need to get some squeeze action going on above 4180 to start actually making some new highs. And we've got a lot of catalysts coming up on deck here over the next week or two to potentially make that happen. Now, on the flip side, again, just as mentioned last week, below 4080, below 4100, below 4080, I get a lot less excited about the market. I would in fact get very defensive and glass half empty if we start spilling over, breaking down below this 4100. But not yet to be seen. We are still waiting for a side to be picked, and so far there are lots of good individual stock movement, which we'll get into in just a second. If we look at the Qs here, I mean, this is a heck of a consolidation, and we are really looks like we are setting up here for the big mega cap earnings that we have. So we'll have Amazon, we'll have Meta, we'll have Google all reporting next week, Tuesday through Thursday. I don't think Apple is until the following week, but those are going to be your big weightings, and even Microsoft, which I believe is next week as well. Yes, it is. It's on Tuesday. So we're going to have a lot of potential movement here from the high weightings in the Nasdaq 100. So this is, this is set. This is set to squeeze. This is set to break out. I mean, this is a lot of consolidation and overlap here. Chart of the week in my eyes, or chart of the month, frankly. So keep an eye on that. Lots of volatility compression right underneath some resistance and just relevant levels here. So this is certainly going to be the fireworks to pay attention to. And lastly, if we look at the Russell 2000, you can see again, kind of staying pretty resilient here, bumping up against the top end of this range. Still hasn't really broken out yet, but that's kind of what we got going on. So that, I think, covers all the big, volatility that I want to talk about. The Qs compression there, and bulls are still just trying to keep this market in check. It's definitely lost some momentum, but that's, to be expected with a bunch of catalysts coming up on deck. So let's move into some individual components here. Let's look at gold first for a second. This was the biggest down week in gold since February. Now, it's not really saying a whole lot. It was down 1.13%, so it's nothing to get too overly concerned about. Frankly, gold has had a really strong move really throughout 2023. So the fact that it's consolidating here looks pretty healthy still. There's not a whole lot of there's not a whole lot of things to dislike at this point. I mean, you could go to the monthly chart and start to project a potential failure here at these all-time highs. A little too early to call that, but the big topping tail here does look a little bit reminiscent of, March 2022 and even the doji and the sort of rejection there in August 2020. So TBD on this, but for now, gold I still think is kind of constructive looking here until proven otherwise. We also have inside weeks printed here in HYG. We don't talk about HYG too much, but this is corporate bonds. So this is credit markets, frankly, and consolidation here after, really a big move on March 31st, the last week of March. We squeezed up here, had a good move, and then we've pretty much been consolidating sideways. So for you credit folks that are looking at that, you've also got the dollar, which printed an inside week. So really small, tight range there this week for the dollar. And same thing with silver. Also had a really good run in March and now is just consolidating a little bit. I think it deserves a little bit of time off here, and certainly put in that inside week. So those are kind of the big components I wanted to talk about. Let's now look at some of the individual names that reported earnings. Let's look at Tesla. So Tesla reported earnings this week. We had a gap down of about 9.75%. Let's look at our rolling returns layout here, and yeah, this is a pretty big move for Tesla. So you can see, if you follow my mouse, if we're looking at this move kind of expressed in ATRs here, you can see it's really a good spike here, kind of top of the chart. Day to take notice. And so when we look here at Tesla and we look at some of the price action, you can see it's just trying to hang on to these March lows. So these March lows came in around 163, 164. You can see the stock settled in around 165. We do have this big glaring kind of open gap here in Tesla, which feels like it just would want to get filled, but we don't know that for sure yet, and I'm not going to speculate. But for now, oversold, loss of momentum, kind of a short-term broken stock here. I think, given the fact that we put an inside session in here on Friday, I think a lot of traders are going to be looking at the way this ends up resolving. Essentially, you're kind of sandwiched right now in between two gaps. One way to look at it. You've got now the earnings gap down here, and now you have the old kind of breakaway gap from January of this year. And so, the bet is basically, which gap gets filled first, right? Place your bets. And so for now, I mean, Tesla, I just think it just needs more time. I typically don't like chasing these things or getting involved too early after a big move, and would like to just see the dust settle, but at least you have your levels kind of drawn there. And this is obviously a big momentum play and tech play that got hit to the downside. We also had Netflix, which did have earnings. It did gap down as well, but not as strongly, not a big move here for Netflix, even though definitely some mixed up remarks there on that report. But regardless, the stock kind of took it in stride here and is still in this general kind of uptrend from May of 2022. So Netflix, don't have a whole lot to say about that, but AT&T, which is a name I haven't looked at in quite some time, but this had earnings, and this definitely got my attention, and this was down 10.41%. Again, if we go back to our rolling returns layout, which is again another layout we have available as a download, take a look at this chart right in here, and look at this. This was a 6 ATR move for T. This basically is off the charts as far back as I can go, which is actually only going back to 2017. It was a huge move though for a stock like this. So it did recover a bit here on Friday, bouncing back those extreme oversold conditions, but certainly, some very, let's say some big moves with earnings in some of these names. I don't want to overstate it. Some stocks have been going up, and some stocks mostly have been flat and sideways and consolidating. Seems like the market is, generally speaking, taking earnings season in stride so far. So what I want to finish off here is with our new layout that we introduced, the strongest and weakest stocks layout. And we look here, again, sorted by the strongest sectors on the week. We had biotech, which really stood out to the upside, XBI. So if we take a look at XBI, and even just this weekly session here, so this was up 5.22%. And so what I want to do is actually just take a look at some of the winners that really lent themselves to this move. And when I sort by the biggest winners here, you've got some... Again, some of these are going to be smaller cap, but you had Prometheus here, which was a huge gap up. I think this was a takeout candidate. I actually don't know. I didn't do my homework on RXDX, but this certainly up 70% this week. We had GERN here up, which is again a smaller company now, under $1 billion, up 35%. We had FDMT, which again is a smaller $600 million. Biotech was up 35%. We had MORF, $1.7 billion company, up 29%. If you look down this list here, basically you've got a lot of names that were up 10%, 20%, and 30% or more. So this is where there were lots of rotation, good action, good environment here in biotech. That was what was really kind of performing best this week. On the downside, we had technology. Technology was the worst performing sector this week. And if we go to the 5-day losers, let's just see what was really, moving to the downside here. You got CDW, which was down 13% this week. I suspect this was earnings, but I actually don't know. Big gap down. I imagine it was on 419. We had STX, Seagate, which was down big this week, down 12%. We had HPE, Hewlett Packard, which was also down 9%, kind of some old tech names here. Juniper as well, Networks, down 8% this week. And F5 Networks also down 8% this week. So there were a lot that were making high single-digit percentage moves and a couple of double-digit moves down in technology here this week. So definitely, kept it at bay, kept technology kind of pulling back a little bit. And, it really was performing quite strong here, the Nasdaq, the XLK over the past 6 or 7 weeks. So naturally, you get a strong move to the upside, some consolidation, some pullbacks, and digestion is really kind of welcomed, I would say, in lots of these names. So this is the entire sector overview. Again, you can see this list here, semiconductors and I guess energy was the bottom performer this week. So technology, I think I said, was the worst performer. No, not quite the worst. It was, semiconductors and energy stocks were the hardest hit this week. So I think that's it. I think I'm going to leave it there. As a reminder, I will be doing a stock market weekly video next week. That'll be the last one for a 2-week break. So I'm going to skip the first 2 weeks in May. Going to take a little vacation, be doing some traveling. So just as a heads up here, we're going to miss 2 weeks in May, but I'll be back next week with one more video after some more earnings season and some more Fed conversation, I'm sure, on the next rate hike policy and decisions. So all be interesting here. Watch the Nasdaq consolidation and keep an eye out for your holdings as we get through earnings season. So that is it for me. Take care. Hopefully this video was helpful. If you have any comments, let me know your thoughts in the comments below. I appreciate it. And thanks again for tuning in to our Stock Market Weekly, episode 680. Do these every week and hopefully keeps you up to date with everything that's been moving. So take care, and we'll see you back here next week.